Welcome back to Trading 360. I'm Nicole Petallides, live on the floor of the New York Stock Exchange. Time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Scott Bauer, CEO of Prosper Trading Academy, talking about a few names here. But first up, just your big picture. Look at the volatility we've seen in the market here today. Do you think today's moves are off this jobs report, which would indicate possible cuts once again? Why yesterday the big sell-off today? I like to hear everybody's interpretations. I mean, I know what I think and I know what the headlines say. What's your interpretation of what's going on here?
You know, I think the sell-off yesterday, and first off, let me start. I hope you guys are all safe. I hope everything is okay, Nicole. The sell-off yesterday, I think, was people just, a little nervous about today and maybe just, selling out before the news. We always hear buy the rumor, sell the news. That may have been a little bit of the opposite yesterday, sell the rumor and then buy the news today. I am very surprised at the market reaction, quite honestly. And I think that we do have to take a deeper look into this jobs number and see. I know we saw where the jobs are created, public and private, but I think there's more to it. And that's why the market is reacting so positively. But it's a head scratcher to me. We're seeing the 10-year climbing back up towards those highs again, but yet the probability of a June rate cut, according to the CME FedWatch tool, has not gone down. So today's a little bit of a head scratcher.
Understood. Okay. Look, we've talked so much about these home builders. They were able to run up even during high mortgage rates.
Yep.
Where do you think a name like Lennar is now headed? This is a name on your radar. It's up 1% today.
Yeah, and I wish we would have been having this discussion about an hour and a half ago because, it is up a little bit today. But, housing stocks have pulled back a little bit recently as rates have moved higher. But, Lennar is one of the better performing names. And I think it's, has a solid support area around the 158, 159 area, which we were not too far away from at the close yesterday. That's the 50-day moving average. And, if it holds there, I think, we could see a rally back up almost towards 180 or so. So that's what I like here. And instead of looking at upside in terms of buying calls or buying a call spread, I was looking to sell April expiration 160 puts. Now, at the opening today, those things were trading around 275. They're a little less than that right now. But the reason I like selling those puts is because if the stock continues to decline, that gets me to a break even right around that area, 157, 158. That would be my entry area to buy the stock anyway.
Okay, so understood. So you're seeing where you would enter for this stock. Tell us about the chart here today, Rick Ducat.
Pretty interesting chart here. We had a very strong rally starting all the way from down here. We're up like 60-some% from that point here. And what was interesting is that after we had our sharp climb upward, you can see we formed a small ascending triangle type shape here. We had repeated tests of this resistance level near 155, and we did eventually break out to the upside here. But then it was kind of a roller coaster here. We topped out around this red line here near 166 a few times. We had a big rug pull. We fell all the way back down to our old trend line, then rocketed back up again to take us into the yearly highs near 172.59. Now we've been chopping around a little bit here, and you can see and the RSI is reflecting that level of kind of chop here. We've got kind of a triangular pattern unfolding here with two trend lines converging toward each other. We are still above that 50 midline though, so things are slightly more geared toward the bullish side. We also have recovered and retaken our yellow 21-day exponential moving average. We're still above all three of our moving averages. They're all trending upward. Things are a little more geared toward the upside in this name. First, we have to re-establish a position above the 166 level, this repeated stopping area I mentioned, then take out those old highs near 173. To the downside, if we do start to decline, look for us to find some support here, around the area near where Scott was mentioning. 155 to 156 is our old highs plus our 63-day EMA. So I had my eye on a level very close to what Scott was talking about.
All right, so you're in the same camp, it seems. Final thoughts on this one, Scott?
Yeah, it's surprising to me overall that the home builders have really held in there, and that's probably more a case of supply and demand, right? There's just there's no resale out there. There's no inventory, so the home builders, have done pretty well even in this interest rate environment where we're seeing rates climb back up again.
All right, next up, AMD. It's not in the Magnificent Seven. Some say it should be. Your thoughts on AMD today?
Boy, we've seen some volatility, right? What a drop, from those 52-week highs that we saw. It is recovering a little bit today with the overall market here, but I think this one could struggle a little bit here. There could be some support down in the 162, 160 area or so. I think the upside here, though, in the near term might be a bit limited. So instead of looking for a big drop to the downside, which, this may just kind of meander a little bit, I'm looking for this thing to really stay a little bit range bound and not have a lot of upside in the near term. Now, option volatility, implied volatility is pretty expensive here, Nicole. So, I'd rather be a seller of premium here since option premium is pretty expensive. So I'm going out about a month right now to the May 3rd expiration, which is before their next earnings report. I definitely want to have a position on before earnings, and I'm going to sell an upside call spread, the 180, 185 call spread. I can collect right now probably close to $1.75 or so. And I really like that because that gives me a break even at 180, 175 area or so. And I think AMD is going to have a real tough road getting back above that mark.
All right. And so we'll watch all of that. Your thoughts, Rick, whether or not you think that's possible. Is that in the realm?
Sure. I mean, it's been a tough road since we hit those yearly intraday highs. We're down. We've lost about a quarter of our value from that point here. But looking at this chart, we can see that there's been some cracks starting to show. We had this long uptrend here, starting with these earnings that we had all the way back in October here, traveling along this blue line here, touching on it many times. We did fall below it though, and then we retested it. Old support became new resistance. That's a common thing that happens in trading here. Doesn't happen every time, but it happens often enough. It's worth keeping an eye on potentially here. Now, yesterday was a rough day. We had an 8% drop. We fell below our 63-day EMA in orange. We fell below our volume node here near about 175. So this area of heavy trading on our volume profile study, that was a supportive area. We broke through it resoundingly here. Now our moving averages, yellow 21-day and orange 63-day, both have shifted from sloping up to sloping downward here. It's a little hard to see on the orange 63-day, but it is indeed lower than it was yesterday. So these are warning signs of trend change here. You can also see on the RSI, our measure of momentum, trending lower. We've got a downward sloping trend line. We're below the 50 midline here. So those are, once again, not really exactly what the bulls would want to be seeing. One final thing, I'm a little wondering here if we're seeing a head and shoulders type pattern playing out. So we've got kind of the left shoulder and the head. We were talking about this yesterday on our show as well. And, now we've kind of got perhaps another peak. Look for a break below this green line, which would be like the neckline near about 163. That would be a definite warning spot there. To the upside, we'd want to recapture these old lows near 172 and break our way back above that node here. And the 21-day EMA lines up pretty closely with the node right around 180, 181. So once again, similar to what Scott was describing.
All right. Thank you for all of that. Final thoughts on AMD, Scott?
It's been a great one if you've been in for the long run here. But as Rick said, a lot of the momentum, a lot of the technical indicators are starting to show some cracks. That's why I like selling a call spread because option premium is so expensive rather than buying a put spread to the downside.
All right, next up, when we take a look at ExxonMobil, I just saw a report about Brent crude, right? But we think about oil and how it's been running up, and that Brent crude had hit $91 a barrel, and that was on tighter supply, improving demand, Middle East, intensifying attacks, Russia, Ukraine. These were all the things that were mentioned in the article. I'm curious to hear where you think ExxonMobil may be headed.
And people are, may look at me and say, God, you're crazy, Scott. Energy stocks are just going to keep going up with all the geopolitical uncertainty and everything going on right now. And, we've seen energy stocks, Exxon, one of them, really, really soaring recently. However, we're up to some pretty big resistance here in this stock, right at 119, 120 area here. And I think, in fact, the entire commodity space, not just energy, but the entire commodity space, I think, is due for a breather, due for a little rest. There's been so much piling on across the commodity space. So I think we hit some major resistance here. Unlike AMD, where option volatility, option premium is so expensive, it's not in Exxon. Option premium is actually pretty cheap. So rather than selling an upside call spread, because I am a little bit bearish here in Exxon, I'm actually going to buy a downside put spread because that premium allows me to do that. So I am buying the May expiration, regular May expiration. So I've got about 6 weeks on this. 115, 105 put spread, $10 wide. That's only going to cost me $1.10, $1.20, somewhere in that range right here. I'm not sure that we get all the way down to 105, but if this fails to break out, if this resistance holds right here, I can see a pretty quick drop down back to around the 112, 113 area.
All right. So, is he crazy, as he alluded to? Let's see, Rick Ducat.
Certainly not crazy. I can definitely see the thinking behind more of a contrarian play when something has had such a strong move to the upside. And really, if you look at it, we've gone straight up from our yearly lows near 95.77 all the way up to our all-time highs near 120.96 that we've just reached today here. So a 26% increase. The past 22 days, we've only had 3 red candles. And our last red candle, even though it was a red candle, we were actually up on the day. We had gapped up and finished above the previous day's close. So I believe about 12% since this point that we've gained since our close on that red day. So really a strong move in this name. And like Scott was saying, kind of when something has such a sharp, fast move, there can be pullbacks, and it can be a contrarian play. Can make sense in this situation here. We are getting close to resistance here. The +3 standard deviation channel, this red line here, 3 standard deviations up from our blue linear regression line here. That could be a resistance point just below 122. So we're getting close to that level. And we have cleared our previous double top near 120. You can see we topped out a couple times here and here. So we're breaking above resistance today, but there is some technical resistance potentially coming up as well. So in terms of those strike prices that we mentioned, once again, I was looking at a level fairly close, not exactly there, but the confluence of our yellow 21-day EMA and this green line where we had a gap and then another gap and then highs there and some consolidation just recently. That's one of these frequent stopping points for price, and it lines up with that 21-day EMA right near 114. Then the 105 level is actually the level of our linear regression line. So that would be another kind of justification perhaps for some of these strike prices that we discussed.
All right. Thank you for all that. Great charts this week, Rick Ducat. Scott Bauer, a final word.
Well, that's why we have a two-sided market, right? There's buyers and sellers for everything. And I really like the contrarian play here in Exxon and really, quite frankly, across the commodity space. But, the volatility we've seen recently overall in the market, Nicole, that's not going away anytime soon. We've got some big eco data next week, and then we're right back at earnings season again. We get those bank earnings in a couple weeks. So volatility is here to stay for a little while.
All right. Thank you both so very much. Scott Bauer, Prosper Trading Academy, and Rick Ducat on the charts. Thank you. Coming up next, we'll